What is up, ladies and gentlemen, boys and girls? Welcome to another rousing Monday market mortgage update with myself, Sean Grapevine, director of Agent Direct. And I am joined here this Monday, as with 87.2% of Mondays, by the Mac of the Rate Stack, the one who does best efforts with no effort, the Baron of Bips, the Lord of the Locks. He's the Sultan of SLAs, the king of collateralized debt. He's the Colossus of credit. On his golfing outings with Jerome Powell, he decides whether money printer go or not. Is it a hawk? Is it a dove? Only the ornithologist of this jungle of a market can identify these avian beasts. It's the one, the only, the awesome Austin Riley. Koenig. Austin Koenig. Austin Riley. I got Braves baseball on the mind. Austin Koenig.
Oh, good. Yeah, I actually have a cousin named Riley, so that's kind of weird that you
Wow.
put that in there too.
It's
Crazy things.
Prophetic.
But
how's it going, buddy?
It's going good, going good. We got a, with Jerome Powell and I, when we're golfing, it's very similar to the CPI number of 4. A 4 said a lot. So 4%. I'm hitting bad shots. A lot of 4 going around. Little pun for you guys. We have to do something special, comedy wise, because we have a day where the market's closed and we're doing a Monday market update. We could not even have one, but we love you guys so much. We're here.
Hey, well, we had a whirl. It's good we've got a quiet day today because we had a whirlwind of activity to digest last week, and the 3.7 is the new 3.5. It seems like when it comes to news, the market just can't decide which way to go. We had CPI and a Fed meeting last week, which is rare. I don't think we've had a week where both have happened since maybe like Q3 of last year, if at all. I don't remember. So tell us about that. Oh, let's start out with CPI. I mean, 4%, huh? Pretty good.
4%. It's a nice headline figure. Here's the thing: we'll always get the preach from the Fed that we're not done yet, and I think everyone's on that same page of understanding. Yes, we are not at 2%. That's correct. I think the main thing here is we had headline CPI look good. However, we also had the core inflation, stay, elevated to an extent where it wasn't, way softer than expected or something like that. So, the core aspect, and it's all about the buckets of what's causing inflation to stay on or not. It's going to take time, and we saw the Fed exercise patience, and have a pause in the rate hike. So,
sure.
Right, kind of what the market was expecting. But I think there's still a little open-ended uncertainty in terms of what's going to happen over the next 2 meetings. And data is going to be, the main name of the game. And I know we've been talking about data. That's really what it is still, because that's the only way we can kind of really temperature check outside of anecdotal things. How the economy is faring, and how quickly and how accurate does that depict the actual picture of the economy. We can always debate that, until we run out of breath. But at the end of the day, that's what the Fed is telling us they're paying attention to, and that's what the market has to pay attention to as well, because we're all trying to maneuver and be able to price what the Fed's going to do. So July, it looks like we've kind of gone back and forth. Are we going to have a rate hike? We're not going to have a rate hike. The market is kind of pricing in. Most likely there's a rate hike, but it's not a overwhelming 90%. Everyone's got it. It's about let's say 67% as kind of the ballpark figure what's priced in for July. So it's something that's not perfect, and maybe data pushes that one way or another, and we'll obviously see that as we're sitting here day to day looking at the rate market. So
so help me understand this possible / probable rate hike. Is this based on a still tight labor market? Is this based on continued dissatisfaction with CPI? I mean, and then also what did core CPI come in at? 5 point.
We're 5.3% was core. down from 5.5, but that was what consensus was. So at the end of the day, like CPI can kind of get some gifts handed to them to an extent. Like we can have commodity prices go down quite a bit.
Sure, just oil got cheaper.
Exactly, and you can get some nice, something that's nice, but that's not what the Fed can control. And we've talked about that on the flip side of things, right? Too, like when we had the Ukraine-Russia war start, and commodity prices went crazy the other way. That wasn't something the Fed can control either. So core is a little bit more of what they pay attention to because they kind of are able to take out some of those outstanding, out of their control factors, out of that equation necessarily. But what it is, and I think at the end of the day, like core CPI is still at the elevated level too, right? It's at 5.3%. Some of that stuff is going to take time. The restrictive policy, it's here, and it's on the economy right now, and everyone's having to deal with it on a day-to-day basis. But things take time to get down, like rental prices or something that are a part of core CPI. That's going to take time to get down. Services and everything like that. You just don't pay people less all of a sudden because the Fed is had a certain rate at the federal funds rate.
Sure.
So it's one of those things where we still are going to have pockets of things, and I think at the end of the day, the Fed is just trying to say, hey, we don't want to take our foot off the gas too early, but we know we have to kind of wait and see because there is lagging effects of all this policy in general. We've obviously seen progress. It's not like what they're doing is not working. It's just they need to see it continue to play out before they start changing the narrative and possibly lowering rates, for example. So
Sure. So they're going to have another CPI report before the next meeting, I believe. They'll have 10 days to digest it or so. I think it's July 12th, and then the next Fed meeting is July 25th. So they'll have a couple weeks to digest that. Presumably, we'll continue to get what's the weekly employment number that comes out?
So initial jobless claims is like the weekly update we get, right? And this is one of those funny things where 2 weeks ago that was like the biggest number we had, and that's usually not I would say a driver of all market activity. But last week it kind of got overshadowed with everything else. But it also has been a number that has helped the rate market kind of have a better trading day, and a little bit more yields coming down just a little bit when initial jobless claims comes in higher than expected. It's I think at least 2 weeks in a row where we've had kind of a quote unquote good print there because
Wow. It's sickening, really. It's sickening.
It is sickening. You're cheering for economic slowdowns to get rates down if that's what you're cheering for, right? But at the end of the day, you also don't want to see absolute crazy tightness, right? So or else we're going to continue to be in this world of really tight Fed policy. So at the end of the day, we're still going to get that on a weekly basis. We'll get another non-farm payrolls print at the beginning of July. We'll get the CPI, like you mentioned, and then we'll have a couple weeks to digest just other data for the Fed to come out. This week's data set is a little bit light in terms of what I think would drive major moves in the fixed income market. But we do have Fed speakers that are going to be talking, and that could drive market more than I would say even like the housing data side, because the housing data, again, is a little bit laggy, and we have to also think about it seasonally too. We're kind of in the heart of summer, and still kind of that spring purchase market that can be kind of carrying over into this sort of stuff too. So, housing market's good. We want to be able to have that, but is it going to drive the markets this much? This particular week? I would say probably not as much as we had data. The data was much more important last week than I would say this week.
Sure. Yeah, so it seems like we've got some time to digest this info, as well as not a ton of huge market movers, or at least not predictable ones, right? And rates are sort of pegged where they've been for the last 5-6 weeks. The 10 years in the high threes, conventionals in the low sevens at par, but can really get into the mid sixes with less than a discount point. I think like we said back in September and August. It's like we prefer stability. Well, everybody loves low rates, but stability is a good second best option there. And it looks like we've gotten some pretty good stability, right? We're not having these like the volatility doesn't seem to be as bad. Is that what you've seen in like the actual secondary market as well?
Yeah, correct. Showing you right on the money. I mean, we're kind of trading in a band here. It's not like we don't have insert like tomorrow to the next day volatility. We can still have that, no question about it. But in terms of like very violent volatility, we've kind of stepped away from that for a little while now, and we're trading in a band, which does help. I think really all secondary teams, help navigate a market if it's contained volatility to an extent. So. I think we've also seen that playing a part of there's been more issuance and other debt spaces such as corporate bonds. That's helped drive markets a little bit too, and one way or another. Maybe sometimes not in our favor necessarily, but you've seen kind of people be able to say, okay, we're able to digest this market, and other debt issuances are going out, outside of just regular treasury auctions,
like non have we seen non-QM issuances go up yet?
That's still a market that I would say is there's issuances that are happening. It's still not nearly as hot as what it was in the peak of 21, I think, or early 2022. I don't think I'm surprising anyone by saying that, but it's just
sure.
There's obviously a little bit more of a kind of entering some different issuances that have been coming out, and there has been some busy weeks recently on that stuff. But even in that market too, there's kind of some seasonal slowdowns in the summer too, kind of because there's a lot of things that people take vacations.
Sure,
and those deal makers are off. It's not a huge market. At the end of the day, there's still going to be people there doing deals, and it's just a matter of how much.
Hey, don't defend your old Goldman Sachs buddies out on their, like I don't know where Goldman Sachs people hang out. Montauk.
It's the office. That's where they hang out. So
okay, good. Well, I'm glad to hear they're there. All right. Well, let's just leave it nice and short today by our standards, anyway, and give people a little bit of their Juneteenth Monday back. I hope you guys are all having a great Juneteenth and are observing it in whatever way you see fit. We are thankful to have you guys here and watching. If you have any questions for Austin or myself, if his expertise doesn't cover some of the more in-depth questions that only I can answer, please feel free to leave those in the comments, and we'll work hard to get you an answer. Otherwise, have a great rest of your week, and thanks so much for being here, Austin.
Of course. Thank you, Sean, as always. Have a great day, everyone, and have a great week as well. Thank you so much.
All right, let's go lock some loans.